Hey everybody, good morning. It's about 9 o'clock in the morning on the 13th of April 2022. What I'm going to do today is I'm going to do a little bit of analysis on the S&P 500, and I'm going to be using a bearish bias on this. So just to kind of keep that in mind as I go through the chart today, that there are definitely some bullish scenarios, but I want to point out some things that I see that could potentially be a warning for us. Before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market here. So let's go ahead and move on into the chart. So with this, again, what I mentioned before is we definitely have some bullish scenarios on here. I don't want to discount that. But what I will say is I'm seeing some things that are pretty concerning, and we're going a little bit deeper than really what I would have liked. So I want to talk about that because I think it's important for us to, to be able to be, adaptive to change and be able to recognize what's presented in front of us and not getting too caught up in one scenario, right off the bat. So, and just kind of stuck with it. What I want to look at, we've got, a couple things here. We've got a gap fill that's sitting right here at about 46.65, we'll call it. We tried to hit it, but we didn't quite get there. And what happened since then is a little bit of a concern to me, and I want to talk about that. It is a little concerning to me. So let's go ahead and just look at this here for a moment. We've got 5 waves down, and that is I have to be concerned with those 5 waves, and the reason why is because, well, you've got 2 scenarios. Either this is what everybody refers to as a falling wedge, which is extremely bullish, but what it looks more and more like is a leading diagonal, and that's not that great, you guys. So that's really not that great. We have to realize what we're kind of looking at here. And you've got a good wave structure. You have some overlapping here on this. Let me just go ahead and zoom in on what we have basically just finished creating. I'm going to go to a 15-minute time frame here and just kind of look at this here. We have all of the ingredients necessary to count this as a leading diagonal. Okay, so let's just go ahead. Let me get out my tool here. So from the top, right? So we've got a nice little A. Let me try this again here from the top. We've got an A, a B, and a C to finish that move. Let me put this on a lower degree here just to kind of keep things in perspective. From here, we've got a nice wave structure up. Some people can count this as 5 waves, so I'm going to continue to count this as A, B, and then an extended move here into wave C. So we got the wave C up here, which would have completed the wave 2. From here, we're going to be looking to complete wave 3. Well, I think it's also easy and reasonable for us to assume that we've got a little bit of an A, a B, and then 1, 2, 3, 4, 5 here into wave C. So again, this also works out pretty well to be the completion of the wave 3. What do we have from wave 3? We've got a nice little ABC here into wave 4. Now this one's a little bit different. An A, a B, and then A, B, C to complete what I've got here as our wave 4. So we've got a wave 4 here. And then what do we have to complete this move? And I think that this move is complete. So from up here, 1, 2, 3, 4, 5 into the A, B, 1, 2, 3, 4, 5 here to complete this. Are we going to get a little bit of a lower low? I mean, it's possible. It's possible that we push a little bit lower. If we got a 1, 2, 3, 4, 5, yeah, we can go a little bit lower here. But I think that we are actually at a point where we're starting to see signs of a movement, to the upside. We're going to break up and out of this. And one thing that I want to point out, I think that it's probably foolish right now, and I may regret saying that at some point. But for right now, I think it is a little bit foolish to be going short down here when we had, a massive rally off of the lows, right? And now we're seeing, signs of weakness. But this is, I think, where a lot of people tend to lose money. And what basically they're seeing here is, we're seeing this complex correction, which could potentially be a leading diagonal, which would be bearish, right? But when you have a leading diagonal, it tends to retrace a significant amount of that leading diagonal. And a great example here is this giant falling wedge that we had right here. Look at what happened. Okay, this is a really, excuse me, this is a really great example. Look at what happened. How far did we retrace this move? If we take a dominant pivot high here, we go down here to our dominant pivot low, we retraced almost 78% of that move. A 78.6 would have been that gap fill that we needed. We went past the 618. That is significant. Let me see if we take this off of log scale, we keep it on linear. It doesn't look like a whole lot is changing. Again, that 786 would have been the gap fill, but we went past the 618. We went almost to the 786. So it would be reasonable for us to assume that that's probably going to happen again. Okay? So again, looking at this with the bear goggles on, right? We have the potential for a WXY to complete one move, and then an A, B, C, maybe you call this, however you count this. It looks like we do have something that could be completed here, and I'm going to explain why I think that here in just a moment. So if we have this, then what we're going to be looking for is, probably a 5-wave move to the downside. Okay, so you're going to be looking for a 1, 2, a big 3, 4, and a big move down. This does not look all that great right now. What we would need to see is we'd need to see a move up here to take out this high. This level right here and this gap fill, if we get up to this level, I expect we're probably going to continue probably blasting through 46.62, 46.50, 46.35. If we get up here to these levels, I expect we're going to blast. But for right now, this is what I'm paying attention to. This is what I'm seeing. So I want to pay attention to this. We're going to take this dominant pivot high up here. I'm going to put it over here to the side so it doesn't take up a whole lot of real estate on the chart. We're going to go all the way down here. Let's see here. And I've got my double clicking issue. Let me just go ahead and pull this one down here to this dominant pivot low. So we've got a dominant pivot high. We've got our dominant pivot low, and then we have our pullback, which again was a significant pullback. So we've got a 100 sitting all the way down here at about 39.50. Let me put the 123.6 on here because these are going to be our corrective targets to the downside. If I were to sit here and tell you, that it's likely that the S&P is going to come all the way down here to between 3,800 and 3,950, if I said that right now, you probably would think that I'm crazy. But this is where our corrective target would be for this. And again, that doesn't remove a lot of bullish tendencies along the way. And what I'm going to talk about is basically where's the price right now? Where are we looking at right now from a price movement standpoint? Well, I actually think we're probably going to see a move up here in the near future, probably within the next couple weeks. Now, let's just say for a moment that this was the low. The low here at about 43.81 was the low. Let's just hypothetically talk for a moment that that's where the low is. Well, I'm going to take my fib retrace on this from our dominant pivot high. I'm going to try and pin it perfectly here. Dominant pivot high, and we're going to pin the dominant pivot low right there at 43.8179. Well, again, if we were to see a move up to, so if we see from down here, we see move up, retrace, and then we see a move all the way up here to the 786 or even to the 618. I mean, these are significant moves that could very well happen in this kind of a scenario. And, maybe this actually, finish that. Maybe this actually goes up here to the 50. We do a pullback, right? Find some support here at some support and resistance levels. More than likely, it's going to be somewhere right around here, about 44.55. And then we see that final move to go up here to about 45.82. If we don't push through these levels, like if we don't keep pushing through and create a significant wave 3 thrust and getting us up past these highs back here, if we can't do this and we get stuck here at the 786 or even here at the 618, which is possible, if we can't make it past there, then we're going to start to see a realization that we're going to be working on a wave 3 to the downside. And that would be the bearish goggles that you probably should have on right now. So how do technicals look on the S&P? Well, I'm going to go to an hourly. I'm going to take a look at this. I'm going to put all of the important waves on here. I'm going to get the 3 hour, and I'm going to put the daily on here, and the weekly is on here as well. So let me just pull this down and zoom in and see where technicals are right now, because I think this is also important to pay attention to. Well, what I can see is the daily has pretty much reset. It's not quite there, but it's almost there. The 1 hour has reset. The 3 hour is also down here as well. What I don't see is a whole lot of bullish divergence, right? I'm not seeing bullish divergence on on the lower time frames. Maybe on the hourly you can start to see it, but on the 3 hour you don't really see any bullish divergence. I am, however, from these lows back here, I'm starting to see some hidden bullish divergence on the daily time frame. The weekly has crossed up, so that leads me to believe we're probably going to see that movement to the upside over the next couple weeks. Now, is it going to go to new highs? That is debatable. Again, bottom line, okay? The bottom line is this pivot up here is going to be what's going to decide the future, okay? This pivot right here, as much as, I hate to admit it, this line is going to be what determines whether or not we are in a bull market or we are in a bear market right there. And that's at 46.3730. If we can't take out that level, then we are probably more than likely in a bear market of sorts. Until we can take that out, I would say that I do believe that we're going to have rallies, but I think that we need to be cautious about stocks, cautious about indexes, cautious about oil and natural gas and all different kinds of commodities and precious metals. Be cautious about all of that, because while in a bear market, bears are usually not the ones that make a whole lot of money in the early phases of it. And that's evidenced by what happened, back here on February 24th. We had a big move down, and then, face melting rally to the upside. Then we had another move down. And I got caught in this as well, saying, yeah, we're probably going to be going lower. Looking at potentially a move down here. Because I thought at the time, right? At the time, I thought this pattern that we were in was a WXY X, we're going down for Z, which would have taken us all the way down here to about 4,000 or 3,900. Not 3,900, but 3,975, 3,980. I was almost certain that we were going to go down here because the pattern looked that way. But what ended up happening, we didn't get there, and we started rallying to the upside. We had one of the biggest rallies that we have seen in a long time, in a short period of time. I was expecting that pattern to look back then what we have right now. Didn't happen. So now I'm sitting here, now that we do have a pattern that I was looking for, I am expecting a significant move to the upside. Potentially up here to 45.50, 45.75, but if we can't get past these levels, we're going to have a significant move to the downside in the next few months. Now, again, I say months, I don't say days, because again, there are always more puts open than there are calls. So you also have to keep that in mind when it comes to psychology, and it's the market maker's best interest to squeeze as much money out of retail as possible. And fact of the matter is, most of retail is trading options, so you have to be very careful with that. And likely there's going to be some grind here, but it's very possible. If we can't take out this level, we're going to be moving down more significantly. But I do think we're going to get a retrace. I think there's money to be made in stocks, there's money to be made in options, plenty of money to be made even in this little move here, right? But once we get up here to these levels, you have to be cautious, because there's tons of resistance that we are going to be trying to push through. You still have a lot of people that are bag holding from all the way back here. We had a lot of stocks that were topping out back here. You got a lot of people that are going to be trying to get out of positions. So that's what's going to create this resistance that could take us down. But again, we're going to take it one day at a time. We have a little bit of a move up potentially here over the next few days, maybe next couple weeks even. And then we're going to wait and see what happens. But if we can't take out 46.37, this more than likely is a leading diagonal, and we need to take this dominant pivot here, and wherever we pivot here to the upside to make a determination how far we're going to go. But again, keeping an eye down here, 39.61, or potentially all the way down here to about 38.15, where we could potentially be going. Okay, guys, well, this has been fun. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, and wherever you are in the world, I hope you have a good day, a good night, good evening. If you need access to our Discord, you can find all the information that you need on BitDoctor.org. Take care, everyone.